you. The gentleman from Massachusetts, Mr. Auchincloss, is now recognized for 5 minutes.
Thank you, Madam Chair. Welcome, Chairman. I want to start by asking you about inflation expectations, which, as you obviously well know, can be very difficult to dislodge once they are anchored in the mindset of consumers, and what the Fed can do both to address inflation, but also to convince Americans that inflation is going to be lowering in the medium term and thereby prevent inflation expectations from getting anchored.
Well, so if you look at inflation expectations, and of course, we measure professional forecasters, households, market-based break-evens, and things like that, a broad range of things, you do see that people expect inflation to be high in the very near term, but they expect it to come down fairly quickly and get back to. So generally, as a general matter, the evidence is clear that people do expect inflation to come back down to levels that are consistent with our price stability mandate. But this is the first, we haven't had a test like this. I would say we haven't had an extended period of high inflation for a long time, and so it's not a comfortable place to be. Short-term inflation expectations are higher, and it does add, it adds to our desire to move expeditiously and with force to get rates up and ultimately to get inflation down.
So, building on that, 1 degree removed, the only thing more painful than expected high inflation is unexpected high inflation, and it makes it the degree to which businesses and consumers do not have confidence in the Fed's ability to control inflation, or the U.S. government at large, makes it harder for them to make capital investments in the long term, makes it harder to do wage negotiations. Is there a measure of the degree of confidence that both business and consumers have in the ability of inflation to remain low that you are tracking, so that we can try to measure the degree of confidence people have in not having to see unexpected inflation in the future?
So first, I agree. But ultimately, this is the point is that if the public retains confidence that inflation will come down, if their expectations remain anchored, then it will come down. That is we think that's how
self-fulfilling,
it works, right? So by many measures, we track them all. I mean, we put them all in one big measure called the Index of Common Inflation Expectations. We do that, and we publish that at various times. And they're sending basically that message that essentially, yes, inflation expectations are anchored. But as I said, that's good, but it's not enough. We need to get inflation down because inevitably over time these expectations are going to be under pressure.
Are you able to track, though, it seems like you also want to track volatility within that index of inflation expectations to see how much confidence people have that they're not going to see unexpected inflation?
Yes. We look at the distribution, and there's some small signs, concerning signs, and we just can't allow that. We really have to. Ultimately, our whole framework is about keeping inflation expectations well and truly anchored, so that inflation will return to that anchor.
And your credibility in that is autocatalytic in inflation expectations. So I think it's critical that the businesses and consumers have that confidence.
Absolutely.
Can you explain how quantitative tightening, I guess we would call it now, is going to play into that? Unrolling quantitative easing of the last 10 years?
Sure. So it's quantitative easing in reverse. So what quantitative easing does is it reduces the supply of risk-free, longer-term assets, and that tends to drive rates down as people want those. And when we loosen our balance sheet, when we shrink our balance sheet, what happens is the public will be holding more of that paper, and we won't be holding it, and that should have some upward pressure over time. Markets are forward-looking, so they're already pricing this in.
And you don't project any changes in how you're going to do QT?
So we put out a plan. We thought very carefully about it. We've announced it. Markets have seen it, and it's sort of priced in. And I think we would intend to keep to that plan. Of course, one of our principles is that we're always going to be flexible if that's warranted.
Last question for you in the final 30 seconds here, Chairman. Can you give us an update on FedNow and your plans for access both to established banks as well as to financial technology companies?
So FedNow is supposed to go live next year. We believe we're on track to do that. We've got people working really hard on it. for some time. I didn't catch the last part of the question.
And how are you gonna make access available? Is it gonna be just for certain types of banks? Is it gonna be for financial technology companies? How are you gonna adjudicate access?
So that's something we're looking at. We are, you know, I mean, mainly it's for the broad sweep of banks, and we'll have to look at going beyond that.
I yield back.